President Donald Trump's first 100 days of his second term have been anything but smooth. His approach to the economy has raised both hopes and concerns, especially regarding his aggressive tariff policies. These policies have been the focal point of his early term, but instead of quickly reviving the economy and lowering prices, they have created a whirlwind of economic turbulence. Trump made tariffs a central part of his economic plan. He was not just focused on one country, but he imposed sweeping tariffs on a variety of trading partners, especially China. The idea behind these tariffs was simple. They were meant to revive American manufacturing, reduce the trade deficit, and bring in more revenue for the government. Trump argued that by imposing these tariffs, the United States would be able to bring back jobs that had been lost to countries with cheaper labor and more favorable trade terms. However, the execution of these tariffs has not been as smooth as Trump and his supporters hoped. The tariffs have been inconsistent and unpredictable, leaving businesses and investors uncertain about how to react. One day, it seemed like tariffs were going to apply to a certain industry, and the next day, they might be postponed or lifted. This uncertainty has made it hard for businesses to plan for the future, and the market's reaction has been less than positive. The most immediate impacts of Trump's tariff-heavy strategy has been the volatility in global markets. The stock market, which plays a major role in many Americans' financial well-being, saw some of its worst days in decades during the first 100 days of his second term. Billions of dollars were wiped off retirement accounts as stock prices dropped. Investors, unsure about the long-term impact of the tariffs, began pulling back, which further hurt the market. Trump's approach has led to a situation where his first 100 days in office had the worst stock market performance for any president since Richard Nixon. The volatility in the markets during this period reminded many of the disruptions caused by the COVID-19 pandemic when uncertainty ruled the economy. Because of the tariffs and other economic challenges, businesses and individuals alike are feeling anxious about their financial futures. Another concerning result has been the drop in consumer confidence. Polling shows that a significant portion of Americans have lost faith in Trump's ability to improve the economy. Economic approval ratings for Trump have dipped to their lowest point ever, signaling that many Americans are not seeing the benefits they were hoping for. This lack of trust in the administration's economic policies is crucial because consumer spending makes up a large part of the economy, and when people feel uncertain about their future, they are less likely to spend money. The bond market, where governments borrow money, has also shown signs of stress. There are growing concerns that the U.S. government will have to take on even more debt due to planned tax cuts and the shortfall in revenue from the tariffs. This could have long-term effects on the economy, especially if the debt continues to rise without a corresponding increase in revenue. When Trump first promised to tackle the rising cost of living, many Americans were hopeful that his economic policies would lead to lower prices, particularly for everyday essentials like groceries. However, this has not been the case. In fact, prices for many essential items have either stayed the same or risen, leaving many Americans feeling frustrated. Some of the biggest retailers in the country, such as Walmart, Target, and Home Depot, have warned that the tariffs are pushing prices higher. Because of the tariffs on goods imported from countries like China, these stores are having to pay more for products, and they are passing some of those higher costs on to consumers. As a result, everyday Americans are seeing prices rise, which, really contradicts Trump's promises of making goods more affordable. Polling data reflects this growing concern. About 64% of Americans believe that grocery prices will continue to rise over the next few months. The fear of higher prices is not just impacting consumer sentiment, it's also affecting how people feel about Trump's handling of the economy. His approval ratings on economic matters have fallen significantly, dropping nearly 10 points since his first term. These shifts are a clear indication that the policies meant to improve the economy are, honestly, having the opposite effect for many people. Even though Trump promised a robust economy with rapid growth, the reality is that the economy is showing signs of slowing down. The first quarter of 2025 is projected to see a sharp decline in growth, with GDP growth forecasted to fall to just 0.8%. A major slowdown compared to the 2.4% growth in the previous quarter, and it signals a possible economic downturn. For the year 2025, overall GDP growth is expected to slow to 1.9%, down from 2.8% in 2024. These figures are concerning because they reflect a sharp drop in the pace of economic expansion. When growth slows, it can lead to higher unemployment, lower wages, and fewer job opportunities, all of which are bad for the economy and for regular Americans who depend on a thriving economy for their jobs and livelihoods. The erratic and unpredictable nature of the tariffs has made it especially difficult for businesses to plan. Manufacturers in particular are uncertain about how to allocate resources and invest in new projects. The inconsistent tariff environment has, honestly, undermined one of Trump's key promises to bring back manufacturing jobs to the United States. Without a stable and predictable environment, many companies are, hesitant to move operations back to the U.S. or make long-term investments. Trump's base of supporters remains deeply divided on the impact of the tariffs. Some still believe that the tariffs will lead to a resurgence in manufacturing and job creation, which of course has always been a central part of Trump's message of bringing back jobs that were lost to outsourcing and global trade. However, many people are starting to question the effectiveness of the tariffs, especially as they see prices rising and businesses struggling. On the other side, there are growing concerns about the long-term impacts of the tariffs. Critics argue that the tariffs are not working as intended and are instead creating more economic instability. Wall Street, which initially supported Trump's economic policies, has actually been surprised by the negative effects of his renewed tariff push. Especially those in the manufacturing and retail sectors, are calling for more stability and predictability in trade policies. The public response is mixed. While some Americans continue to support Trump's bold stance on tariffs, many are starting to feel the economic strain. Rising costs, market volatility, and slow growth are taking their toll on public sentiment, and the coming months will be crucial in determining whether the policies can deliver the promised benefits or whether they will continue to create economic problems. The days of his second term have been marked by a series of economic challenges. His aggressive use of tariffs as a central policy tool has led to market volatility, rising consumer prices, and eroding public confidence. Instead of quickly improving the economy, his approach has created a sense of uncertainty that has affected businesses and households alike. The coming months will reveal whether Trump's tariffs will ultimately result in the manufacturing revival he promised, or whether they will deepen the economic challenges facing the United States. At the moment, the economic outlook seems uncertain, and the question remains whether these policies can deliver lasting benefits, or whether they will continue to weigh on the economy. The road ahead is likely to be turbulent, and the impact of these decisions will be felt for years to come.